On Thursday, spot gold rose by more than $20, driven by safe haven demand amid escalating geopolitical tensions. Investors are awaiting the upcoming release of the U.S. non-farm payrolls NFP report to analyze the Federal Reserve's future monetary policy trajectory. Additionally, the U.S. Supreme Court is expected to rule as early as Friday on the legality of Trump's tariffs, a major event that could also trigger significant volatility in the gold market. Spot gold climbed $20.91 or 0.47% to close at $4,477.41 recently. Two oil tankers linked to Venezuela have been seized, coupled with the arrest of Venezuelan President Maduro, sparking investor anxiety. These geopolitical risks continue to provide support to the gold market. Furthermore, the White House stated on Tuesday that U.S. President Trump and his team are discussing a range of options to acquire Greenland, including the use of military force as one possibility. They are also exploring the provision of a one-time financial compensation to Greenland's residents to encourage them to secede from Denmark and align with the United States. Analysts believe that the subsequent development of this incident may not only trigger frictions in U.S. Europe relations, but also bring new uncertainties to NATO internal coordination and the geopolitical landscape in the Arctic region. HSBC pointed out that amid rising geopolitical risks and other supporting factors, gold prices are expected to reach $5,000 in the first half of 2026. The market will focus on the U.S. December NFP report to be released on Friday. Economists estimate that 60,000 new jobs were added in December, down from 64,000 in the previous month, while the unemployment rate is expected to edge down slightly from 4.6% to 4.5%. The market has already priced in expectations of the Federal Reserve cutting interest rates -1 this year. Gold typically performs well in a low interest rate environment. The U.S. Supreme Court has scheduled Friday as an opinion release day. If the Supreme Court rules this week that the Trump administration's tariff measures are illegal, the government may be forced to refund importers, which could exert further pressure on the U.S. dollar and thereby boost gold prices. All content herein is for reference only and does not constitute any investment advice. Investors who conduct transactions based on this information shall bear full responsibility for their own profits and losses. If you find this analysis valuable, please subscribe, like, and share it with your fellow investors. Thank you for watching.